All right, a look at U.S. futures. Yes, in case you're just joining us right now and wondering why some of these contracts are down 2%, 1% on the S&P futures. Yeah, well, you got to blame is it the bandwagoning? Is that the verb there on the DeepSeek trade? So the opposite of this is obviously a lot of the related stocks in China are actually moving to the upside here, and might this give you something to think about as far as stretch valuations in the U.S.?
Headline earnings, guidance, importantly, monetizing AI, those are the key metrics. Are they going to justify what continues to be a premium valuation? How are you approaching mega cap tech?
I think this is another area where the story is moving so quickly that markets and commentators can barely keep up. And we know that the advances with AI, it's become self-propelling, essentially. The AI is in itself allowing the cycles to be shorter and progress and innovation to be faster. I think what we're seeing now, and this comes out of your region, is the very notion that we could have, and with DeepSeek as an example, simply, we could have the first mover advantage could quickly be eroded by some of these large tech companies that have invested billions in maintaining an edge with AI, and a lot of the froth could well be built into that first mover advantage being maintained.
You taking away Nasdaq futures down 2.6% at time of as I'm looking at them right now. What are you taking away from a market's perspective about this wake-up call?
I think it's really massive, and I think it's massive for two main points. It's not just about the challenge to US hegemony in the space. It's not about the disruption potential there. That's a kind of a side story. And I think Robert Lee's analysed it perfectly there and summarised kind of the sector challenges there absolutely perfectly. And that doesn't change the fact that NVIDIA still got monopoly in the space, and many of the big names do as well. The reason this is such a game changer is that it's about cost. It undermines the immense amount of money that's been spent on hardware by the US mega cap tech stocks. Sure, they want a dominant position, but it now looks tenuous that they're going to get a return on that investment. That was always difficult. But now, and this is the second aspect, now that this is open source, it really makes it very unlikely that they're going to be able to justify the return on investment, given that there's a much more cheaper alternative out there for the world to use.
We are there, finally, we got there. The Chinese just popped the bubble in the US AI mania markets. So best advice is sell all your shit, come back in 5 years, right? No, not so fast. Look, what happened overnight, I mean, it's really started to materialize itself throughout the weekend. It's just the Chinese basically, and this is as far as I could gather all together throughout yesterday and this morning, but it looks like they released or they announced 3 new artificial intelligence apps, which by the claims they're making are promising to achieve the same results of something like ChatGPT or Claude 3.0 or what was the other, Llama, something like it, but they're doing it by consuming 70 to 80% less in terms of power consumption, computational power required, which at the end of the day it translates in a very much smaller financial and economic input in order to get to the same results. Now it's all up in the air for now, just to be clear. I mean, those are claims, and especially coming out of China, you never know, and pretty much all the analysts in the world are now looking into it to either confirm or deny the news. But of course, as you can imagine, the market reacted particularly bad to it. The US markets just opened up 6 minutes ago, and of course NQ futures gapped down massively, same for the S&P. The Dow and the Russell holding up relatively better for now. As for the rest, you've seen the DXY keep on coming down, but really it was already coming down. It was already topped out. And as we have seen in the weekly market recap from yesterday, the euro was rebounding, the pound was rebounding. I mean, this move was already in place, so I wouldn't put a lot of weight. As for currencies, I wouldn't link it to what is going on in China. Gold, it's having a little bit of a dump, might be liquidity issues, might be a lot of people exiting the market and trying to look for a safe haven throughout this day of panic, so to speak. Bitcoin holding up relatively well, all things considered. Oil didn't really move a lot. Yields coming down, although again, it's just the markets just opened up. So I wouldn't really be too much worried up until the end of the day, and not only that, up until the end of the week, really. Conversely, the bonds catched a bit, of course, TLT, the mid end of the curve, and of course the short end. So I mean, as for now, it's really hard to assess what's going on for real. A lot of rumors, a lot of speculations. Um, Look, the point sticks that if this is confirmed, if this is actual reality, if this is true, that is a major slap in the face of the entire US, Silicon Valley, and AI industry, because up until this point, we have seen billions being put into this industry and into this technology with the promise of returns to be determined, whether in the amount and in the timeline for them. So allegedly, and again, these are all rumors I gather this morning. It looks like the Chinese achieved these results. They came up with these applications with these three new what was that, LLM, learning language models, spending and investing only 6 millions, and they did it kind of like in less than 1 year, while you've seen billions being thrown at AI in America over the last, what, 3, 4, 5 years. So, I mean, it's natural that the market reacted this way. Now, again, don't confuse a knee-jerk reaction by markets for what it might be or it might not be the fundamental of the news. So that's really not confirmed yet. What's interesting is that I think it moved a lot in terms of the perception, right? These thing coming out, whether it's going to be true or not, but I think it really shaked out the minds of people participating in the environment because evaluations were already high. We do know that, but now people are really starting to question if there is really a way to do it in a much more efficient way, both technologically, from an engineering standpoint, from a financial standpoint, from a power consumption standpoint. And that's what happens every single time when you got a new technology. You have a top dog at first, and it creates a sort of a monopoly, like Nvidia did over the last 2 years, a little bit more than that. And if you see those revenues going up and up and up and up, earnings going up and up and up and up, evaluations going up and up and up and up, it's just a matter of time before those high prices, high evaluations, high earnings attract into the space new competitors. And what happens, again, whether if it's true or not, we'll see. But what happens if you got a competitor coming in saying, we can do the same thing, but we are 50% cheaper than that? You need to rebalance things out, right? The market needs to reprice everything up or down. So what was particularly expensive earlier, it's now being taken down to meet that sort of equilibrium that the new competitor kind of brought into the market. So again, my take would be, as for this day or this week, don't panic, don't go all the way one way or the other, and just let the market clears out the air, because I think the market is just trying to digest what just happened. And neither me, neither you, and not even the market yet, I do think nobody is really aware of what's going on and whether if it's true or not. So there is a little bit of a fugazi component out there right now, and we'll need to wait and see how things shape up in the next few days. On top of it, just remember that these news basically hit the market in a week where we're going to have FOMC, so rates decision, Powell press conference. So the market was already kind of on its feet waiting for Powell, and now you drop on top of it a bomb like these about AI, which has been the main driving factor. If you remember the tech sector, the Mag 7, Nvidia, Google, Apple, Meta, they were all throwing money at AI, and they were all building up massive expectations as for the revolutionary aspect of the entire sector and the potential huge revenues down the road. Although, again, the problem is always like, yeah, you are promising a lot of revenues, but we are not seeing them yet, and we don't know where they are supposed to come or when. And the general public, really, apart from using AI to answer silly questions, more often than not, they're not really on board. I mean, I get that. I get the point that from a B2B perspective, you can already see results. But now new competitors stepping in and saying, you know what, instead of spending billions to build up all these data center, what about, because I got a technology here which doesn't really require such expensive GPUs as for NVIDIA Blackwell lines, right? I can run my new AI application on a normal gaming GPU, like a 4090, or the new 590 is just announced by NVIDIA, which are much cheaper GPUs compared to the others which were sold off up until now, and which they were bringing massive earnings boost for NVIDIA. So I guess at the current moment in time, don't read that much into it. Just wait for the market to either confirm or deny. And again, even if you were exposed somehow, it's hard to imagine these markets. They are gonna just drop like these and never coming back, at least for a bounce. So you might get the chance of deleveraging a little bit to the risk and whatnot. Just I would wait a little bit. Don't take any type of a impulsive type of a reactionary decision today, and see what happens. We're going to have more clarity on it, I guess. But the big thing, I guess the big takeaway as for now would be to acknowledge the fact that these AI monopoly, this fairy tale about the US being the all and be all for what concerns AI and the future of AI, maybe it wasn't that strong reality that everyone was thinking of. It's in a conversation I had this morning, I defined this moment the Sputnik moment. If you remember, throughout the Cold War, we got the space race in between Russia and the United States. I mean, eventually the United States won, but throughout that period, it was always neck to neck for who would have been the first to put a man on the moon. Now the race is to, about who's the first in achieving AI, the next big thing. And I mean, it's obviously it's important. I'm not discarding the importance of the entire industry or topic. It's just it's gonna be a bumpy road to get there, and a lot of what people deemed as realities might be, might need to be reconsidered throughout, now and then. So just be aware of that. Don't take too much risk. And now more than ever, you know that every time you take some for granted, that's when usually things start to show you that it's not really like that. So just be aware of that. Stay sharp, stay cool. You're gonna have FOMC the day after tomorrow, and up until that point, I guess being a little bit defensive here might be good. And we'll see what's going to happen. Before checking out, another good thing, so to speak, it would be that these models China brought up, they are all open source, while Meta, Google, Facebook, not Facebook, what's the other? Apple, while their models are actually proprietary, I mean, they are in a closed loop. You can't really see through the code, right? There is some sort of a license, and you can access it, you can use it, but you can't see the code. You don't have access to a lot of what is, let's say, beneath the hood, underneath the hood, right? While instead the approach that China is taking is making it open source, kind of like Linux and Android, and everyone can see the code, can modify it, potentially improving it. So if you put yourself in the shoes of some companies which were paying a lot of money to access these AI applications provided by Meta, by Google. And now you can use an applications which potentially it's promising you the same performances, but since it is open source, you don't have to pay that huge fee in order to get it. So again, this is another thing which could erode the future earnings for these big tech companies in the US. And that's why the market might be a bit concerned, or at least the knee-jerk reaction. I mean, you immediately start to think about it, right? Because if then those projected earnings all of a sudden evaporate, why am I paying that big of a premium to own these company stocks? It's all about that at the end of the day. So again, I'm gonna get back to it over the weekend when we supposedly we should have a bit more information. But as for now, just remember the market could really go irrational right here, whether to the upside, the downside. Volatility is going to be huge. We've seen the VIX actually peaked at what it was last time I checked throughout the morning, it was around 46%. So again, difficult times, but at the same time, good opportunities if you are, let's say, a day trader. Just again, as I always say, don't lose your shirt in the process. All right. And with that, let's end up this flash update. And I hope to find you back throughout the weekend, next weekend. Be nice and be cool. Niels out.
The point is, ladies and gentlemen, that greed, for lack of a better word, is good. Greed is right. Greed works. Greed clarifies, cuts through, and captures the essence of the evolutionary spirit. Greed in all of its forms. Greed for life, for money, for love, knowledge, has marked the upward surge of mankind, and greed, you mark my words, will not only save Teldar Paper, but that other malfunctioning corporation called the USA. Thank you very much.